The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, even with falling crop condition ratings, a weather situation that's not really that ideal in many parts of the country here right now in the U.S., all that together, you'd think the markets would rally a little bit in the grains and oilseeds on Tuesday, but we did the opposite. Just couldn't find a friend, it felt like, and the trend was to the downside. We got big USDA reports coming up later in the week. There's a lot to kind of take in and digest here, and a lot of conversations I know have to be had with some folks. So let's dive into this. Let's talk about where we stand right now. Joining us for market analysis here today on Market Talk, Jacob Burks with agmarket.net is back with us. And Jacob, it's good to talk with you again, buddy. Thanks for being here, and you're wearing red, which maybe that was a precursor to Tuesday's trade.
I take all the blame. I'm sorry. I should have wore the Tennessee orange for your Vols when the College World Series last night. It's my fault. I apologize.
I didn't even wear orange today. It's technically my wife. I mean, she's got me cheering for the Vols, but it's more Vols by association for me right now. Yeah, but no, I'm not going to pin this on you because I don't think it's your fault you wore red on Tuesday. I just think these markets in general just can't catch a break no matter what sort of bullish information is thrown at them. It's just not enough right now, it feels like, Jacob.
The momentum is definitely to the negative side, and it's such a it's such an emotional thing when you talk about flooding and damages and storms, and getting on Twitter and social media and watching these videos of dams breaking and whole towns flooding, farmers looking at crops that are a lake, and so all that moisture, all that water, it's the damage is there. But you've seen the numbers and what kind of analysis that we can do to see how much damage is there. That's the trouble. And I'm not going to try to talk like an expert on that, but the numbers that I've seen have been less than 10% of the corn crop, less than 6% of the bean crop is actually in that flooded, damaged zone. I know you got low-lying areas and fields, but that'll be zeros. And I know those are problems. But I think the major part of that is the amount that you're adding to the production, the yield in the areas that are catching the rain. And the market, whether we like it or not, sometimes just doesn't care about the emotional side of it. And you look at what they were a lot more worried about was the fact that the eastern Indiana, southern Illinois was not getting rain. And so some of these later forecasts have added some of that in. Confirmations of rains over the weekend from the eastern Indiana guys, just a lot like last year, they kind of had that life, that season saving rain over the weekend, and that was stuff that the market really is trading right now, is some of the dryness areas that are getting moisture. So unfortunately, it's been tough conversations with guys that across some areas that have been struggling for rain for 4 or 5 years that have all of a sudden in 1 year gotten all the rain that they had been asking for.
I was thinking about this today, and I'm going to pose this question to you. We think about looking at the crop condition reports, of course, and we saw 3 percentage point declines nationwide in corn and beans. Spring wheat was down as well on Monday afternoon's report. Yet a couple of years ago, we would see that, and the trade would rally. I mean, you would bet the farm on the trade, on the market rallying. But now, with the amount of computer algo type of trading that's in these markets, it feels to me, it feels almost like the USDA Crop Progress reports a little bit of a weekly beauty pageant contest, so to speak. The market, the algos just take it, churn it out, and go, okay, well, that's that. We're going to trade whatever else we want to trade. Just doesn't feel like it has the same effect right now.
Well, you probably look at what the results last year of how those algos would trade it pretty heavy, or last couple of years. I'm sure they did a little tweaking on that number of how they use that, because it's a 70-mile-an-hour test. And I'm sure some of the hate mail that I'll get here today over me saying that the crops look good or whatever it was going to be, you don't know what's in those fields. You saw some uneven stands, but the vibrant green and the canopies and all this stuff kind of changed things. And I understand that. And the final number isn't done until you start seeing combines go through. We get it. But when you do see a pullback in the conditions, and a lot of that was because I think it was Indiana, Ohio, that the numbers came off significantly. And it was because of that dryness, as we were looking at. And some of those rains came in late in the weekend. So I've always tried to discount the conditions report my whole life because I don't believe that it has a very accurate. There's not a lot of correlation between final yields and where they were at. So, but the markets have always traded. But I do believe what you're saying is true, is that we're not really trading that as much as we have been. And this is pretty evident here coming into this week when you see a pullback and no love.
So how does someone navigate markets like this right now? I mean, let's talk about that. And like you alluded to earlier, some tough conversations that are being had right now. And I know it's going to depend on where you're located, et cetera, et cetera. But I mean, when the trend is just so bearish in these markets, I mean, and then to throw on top of it, we'll talk more in a second about the upcoming reports on Friday, big reports on the way. How does someone manage this? I mean, how do you objectively try to take emotion out of it and look at your marketing?
Well, that's a good point right there, and is take the emotion out of it. And for me and my job and what I do and talk to the producers, that is not my livelihood. I'm not out there looking at problems and hoping that I have a crop and then having to come in here and look at a 20 cents down in 2 days. So I think taking the emotion out is very hard. And the one thing I love options. I talk about options a lot. I love having a floor in the market because the emotion's gone. Then I can take a look and put a floor in there and hope I lose the money. I hope that we get a rally. And kind of take the what if, the fear out of the marketplace. And I do think that that's still something that we can do, and we have to look at a way to put that in for a couple reasons only. We talk a lot about looking back at 2014 and what the markets did. And after this June report, it did not stop going down. Markets do not have to bounce. It does not care, what the cost of production is. All those things said. You look at going back to 2014 and seeing the market go down to 318 and a quarter. I think that was the low that year in October. Now we did get a bounce as the combines rallied through there, but the pain can be felt pretty quick. Where are we going to bounce from? Where do we find some type of recovery? Where do we find the buyers come in? I don't know. But if history tells us anything's there, we know what it can do. And if you see this report on on Friday, come in here and find a couple of million acres that was absent in that March report, then I think that you could be in for quite a scare. So I do believe, I'm not trying to doom and gloom and everybody run for the hills, but I would say that it's something that is wise to realize that it can go lower. I mean, I've talked to people here, Jesse, for the last 2 days that we talked about marketing, we talked about a game plan. And maybe they just didn't execute like they wanted to. We were waiting for a little bit more. And now it's okay, what do I do now? Now you're down below some of the support. You're down below the May lows that we saw. And this is something the February lows, that we have major problems on our hands now.
In terms of those reports coming up on Friday, they're known for volatility, surprises, et cetera, et cetera. What are the biggest things you are going to be watching for when those reports are out at 11 a.m. Central Time Friday?
I think the quarterly stocks report is something that we have to always remember is a part of this report, because everybody wants to talk about the acres numbers. Now, I think that if you remember the years past, when you have major rain events, major flooding, 2019 was one where the USDA said, hey, we really don't know. We didn't get a good accurate look, and we're going to kick the can down the road. We're going to give you these numbers maybe on the July WASDE or something. That very well could happen. I kind of expect that to happen in some of these South Dakota and northwest Iowa. I think that could be the case. But I will be focusing more on the planted acres number and how they come into the prevent plant and the games that you have to play. Are we going to consider that field out there that's underwater a planted acre of corn, and then we'll call it prevent plant, even when it was probably going to be a spring wheat or beans. So there's little things that you have to factor in there that they will change. This number that we get at the end of this month here will change again in either September or October. It will not be the actual final, but it'll be what we trade. It'll be what the USDA is going to print for the next 3 or 4 months. So that'll be what I look for first, and probably more so in the corn and beans. I think the quarterly stocks numbers, we have a pretty good idea of what we have on hand. I think the on-farm storage is still pretty heavy. I think that you're seeing going into the July 1st notice day too is another reason why you could be seeing some pressure and across these grains, especially in the corn. And I think that could be adding a little bit as farmers and producers that see these contracts come due, and it's time to pay the piper, if you will.
Yeah, and I think too, with funds being short again in a lot of these grains, that's another source here, and that's also maybe could play a role in some added volatility on Friday, depending on what those numbers are, right?
Absolutely, you got end of the month, end of the quarter. You got things that, and hopefully, with the fingers crossed, you see some type of number that's potentially less acres. I don't know how all this is going to add in of what actually got planted, what they consider, what they count as planted, and then all of a sudden you see the funds wanting to take a little profit into the mid-season, mid-year profits. That there's things that could happen that could generate some upward movement on there. But there's a lot of what ifs and a lot of volatility. And we're right in the middle of the volatile season. I mean, this is time to when are we going to get a rain? Are we not going through the 4th of July? It has a history of this time being very, very painful at times, but also giving us some opportunities to act and opportunities to take advantage of some sales that if having orders out there is very important if you get some of these spike moves.
We're talking with Jacob Burks from agmarket.net here today on Market Talk. Let's go over to the livestock trade and kind of a mixed bag. Cattle and hogs on Tuesday ended up kind of mostly mixed to lower, I guess we'll call it, on the session. At one point, we were relatively higher across the board. It looked like we maybe took some profit in cattle and hogs. So I guess let's start with cattle. We know feeder cattle demand remains hot. Cash markets remain well supported. Futures doing pretty good. I mean, what's your perspective on this cattle trade right now, especially after we saw that on feed report back on Friday as well, Jacob?
Yeah, there's a lot to it. I mean, you saw the market sell off last week, and the cattle market has a nasty tendency to trade like that before these reports. So I don't know if you're the one handing out the report before it or not, but if you are, please include me. But you see this market trading lower, then get the numbers back in, and yeah, it kind of confirmed it. And then all of a sudden, you come in Monday, and you have the sell the rumor, buy the fact trade mentality. So I guess the most disappointing part today was the fact that we didn't follow through on that recovery yesterday. We tried, didn't sustain it very long at all. We traded up to 260.50, I think, in the front month feeder cattle. Traded up to that level, and you run into some, I think it was the 100-day moving average there that it ran into, and sold off pretty quickly. So I felt like feeder cattle was a pretty big disappointment. I feel like the cash market has been extremely strong. That's why it was really hard for me to believe the 104 placements number. I shouldn't say I don't believe that number. I just don't believe the result that number was that bearish, actually. I mean, you from that number, look at where they were placed. You had a lot of stocker calves going to grass that coming in to calf. You got a lot of imported cattle up. All that stuff is accurate, but still looking at 104 placement on a number that was pretty low last year, like 94 per placed last year. So I do feel like that number is something that looked really bad, but when you look at the total numbers, it wasn't that bad. There's still not a lot of cattle out there. So we can talk all day long about numbers, about where these cattle are at, what the cash market's doing, how strong it is. There's how much grass there is out there in pasture for these cattle to go to, and then you look at the fact that the heifers are not coming in any lighter. They're still coming in. These producers are still wanting to get paid, so they're sending these heifers in. We're not rebuilding the herd like the cycle's going to demand. For these supply side issues to happen. That's just not happening. Where we're at is what's going to happen. What will eventually take this cattle market down first is the demand side of it. And so far, it's been strong. Box beef still over 320. I didn't even look to see what it did today at noon, but it's been strong and it stayed strong. So I think on the cattle side of it, until that goes away, I don't see a real big problem. But the problem is that can happen pretty fast. And so I think that using some risk management, looking at different ways to market, whether it's the LRP contracts or whether it's the futures or options, having something on those cattle right now are very important.
Cutouts a little over 2 higher in choice and select on Tuesday, so we were a little bit higher again in the box beef. Too, and with cattle, I just feel like people have talked about it. Feel like futures could eventually connect with cash here, and we can make a leg higher, but yet it's not happening. Right. I just wonder if it ever will at this point.
Well, it's this time of year to have a positive basis isn't, especially in the north, isn't all that surprising. So I mean, you can see that the cash market come down a little bit in the south, and we could run those futures close enough where delivery is not a problem. I would say that right now the choppy trade, the sideways trade was probably pretty accurate. I think disappointing too goes back to the feeder cattle a lot. I guess it was just a real disappointing feeder cattle day as we saw another dime come off the corn market and just couldn't sustain that continued rally.
Hogs, speaking of disappointment, I just can't find anything good in hogs right now. It's 1 minute you think we set a floor and then we push down through that again. I mean, it's tough for hog folks right now, it feels like.
Hey, as a Razorback fan, I've just become immune to the disappointment in the hogs. But again, they disappoint. I look at there again, the cutout stayed pretty strong. It stayed, cash has stayed, following the beef, not falling apart, and in these futures just can't seem to continue to fall through. I really think that if I looked at the charts, felt like we had some stability, some base building, and then again we found another disappointment. But if you look at the hog charts and look at it from a daily standpoint, yeah, you feel like there's got to be some support. But if you go back and look at a continuation chart or a weekly or monthly chart, there's still some disappointment that could be left there too. I think if any producer that's out there that's actually looking at it, if you're trading it too and you're long and you're trying to catch that bounce, not a bad idea to come in here and look at some options laid under it, because again, like we've seen in the corn, if you go back and start putting everything back to some perspective of long term, take a look at the inflationary time and kind of take some of that back, you could still see some big moves across the meat complex, and hogs is one of those that shows it really well on the weekly and monthly chart.
Jacob, good stuff. Great conversation as we wrap it up today. Anything final you want to mention or reiterate to folks here this week?
Well, I hope in the next time we talk is we have a different story. I hope it's going to take something to spark it on the report and the grains to turn this thing around. I don't feel like if there's no excitement, no positive news on the report, that it's going to be a while before we see something spark it on the production, on the supply demand side of things. So I would say definitely take a look at, and don't think because we've fallen so much lately that risk management and those tools are not available.
Well, I know too, if folks have questions, they can reach out to you guys very easily. Take a look at all your different analysis and much more. A lot of resources you guys have there at agmarket.net, don't you, Jacob?
Hey, we do. We even got a lot of smart people that write stuff and put stuff on there. So it's agmarket.net. Take a look at our intel. We put stuff out quite a bit daily, 2 videos a week. So give us a shout. We'd love to chat with you.
Jacob Burks with agmarket.net. Jacob, it's good to talk with you again. Thanks for joining us on Market Talk, and we'll talk to you again soon.
Hey, thanks for having me, Jesse. Appreciate it.
That's going to do it for today's program. Thanks for joining us. I'm Jesse Allen. Have a great rest of your day.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.